I'm delighted to introduce our next speaker, Phil Preston, the founder and CEO of the Business Purpose Project. He'll be talking about advancing fintech with purpose. Over to you, Phil.
Hi, Phil Preston here. I'm an author and advisor on purpose in business. And I've got to say, I do have a problem with fintech. I'm fairly financially literate, and yet many products and services are pretty hard to understand. And that's not good for investors, consumers, potential partners to your business, and so on. And the point is, that's just not my problem. That's your problem as well. And I would say that purpose holds the key to the solution. Now, purpose has historically been very much around marketing spin. And I think Tom Fishburne captures it quite well here when he says what a typical marketing plan might look like. And if you look at the bottom left-hand corner there, something to do with purpose is thrown in, but it's not really the DNA of the organization. It's more talking about some feature or purported feature of the business in question. But purpose really should be the greatest asset that you have. So what we're going to go through in the next 10 or 12 minutes or so is defining purpose in the context of business, 3 common mistakes that are made, and then 3 questions you can be asking to help you better promote and form a better understanding from other people about your business, about what you do and why you do it. But before that, a little bit of quick reflection, just so you know where I'm coming from. My background is that I did spend 19 years of my career in the investment management industry and was heading up a team responsible for assessing and monitoring $50 billion of global investments, the majority of which was corporate debt. So these were company debt exposures spread all around the world. And our firm ended up steering through the global financial crisis of 08-09 pretty well. Despite all the toxic debt that was out there, we avoided pretty much all of it. And if we go forward to today, well, the economy is different. The players today are different. We have the same types of problems that exist. And to illustrate that, in the early 2000s at a UK conference, a conference in London, which was about banking, finance, investment, and regulatory issues, I was in the room there and I recall a keynote address by Frank Partnoy. He was a University of California professor, and he said something that absolutely silenced the room because there were many investment bankers in the room. And he said, there's only 2 sustainable ways of making money in investment banking. 1 is arbitraging rules, and 2 is taking advantage of dumb clients. Now, I found this insightful, rather funny, but overall, as you could imagine, it didn't go over too well. But it turns out he was right, because a few years later, when we did have the toxic debt-fueled global financial crisis and recession, this was all about over-engineering financial products. It was arbitraging rules, including credit rating agency rules. It was taking advantage of clients who didn't know any better. And luckily in my firm, we had a large and experienced team, and we knew the intrinsic value of these products was not there. Now, this is relevant to fintech because people are very wary of business motivations. Fads will come and go. There'll be brilliant businesses in your sector, and maybe some will look back on and wonder, well, why did we ever think they were going to be okay? So the question is, how do you build a sustainable business with this backdrop and the changing expectations of society today? So to break this down, let's first look into business purpose. A business purpose statement should be conveying how you aim to benefit society in a profitable way. So notice I've thrown in profitable way there, how you aim to benefit society in a profitable way. So we're not just talking about doing good for the sake of doing good. We're talking about the commercial edge and the commercial process of doing good. So by doing something that society needs, it means you're reducing the risk of, I guess, your products and services becoming obsolete. And if you can do it better than others and do it competitively and profitably, then that ensures you have that sustainability and you build value in your business that really sticks. So be aware that purpose is not the activity you do. It's not the product you sell. It's not the market position you would like to have. It's not the level of profitability you want to achieve. It's how you aim to benefit society in a profitable way. And by the way, in case you're watching this and you're a not-for-profit or a social enterprise, just substitute profitable with financially sustainable. A company in your sector that I looked at briefly called Borrowwell has the purpose of making financial prosperity possible for everyone. So that really is talking to that end benefit or that end goal And Borrowell seeks to do that in a profitable way. And I will come back to that briefly a little bit later on. Now, in his book, Good to Great, Jim Collins, now this book was put out in around 2001, 2002, but it still holds a lot of currency today. He calls technology an accelerator of business models and innovation. So the key question is we need to ask, well, how are you using technology to think differently? So technology in your sector, for example, can help provide products and services to underserved segments of our population. So where maybe traditional products, say traditional insurance products or investment products and other things, have been too expensive and unavailable to the average punter, but it is purpose that really defines the challenge and gives a springboard for finding great opportunities. Technology will be a great accelerator in that process, and I know many of you are addressing these types of challenges. So overall, sounds pretty easy. Why all the fuss? Well, the question for now is, do you have clarity of your purpose? And we're going to explore this a little bit more. And to further explore that, I'll move on to the 3 common mistakes that I find are made. There's more than 3, but I'm just going to address 3. Mistake number 1, purpose gets confused with values or ESG or responsible business. So let's be clear, purpose is the DNA of your business. It's your main goal. It's why your business exists. Your products and services are the what, it's what you do, and the way you work is the how. So values are very important in how you do things. Being a responsible business is really important in how you treat stakeholders, i.e. important in how you do things. And there's a big checklist there when we go into responsible business. It includes environmental impacts, diversity, equity, inclusion, modern slavery, and a whole raft of issues. There are at least 20 plus key areas that need to be thought about. And these are essential for brand and reputation management, but that's very much a risk-based conversation. This is what gets you to and keeps you at the starting line, but don't confuse it with purpose, because purpose is not about risk management. It's about value creation for your business and society, and those things going in tandem, hand in hand. So mistake number 1, get over it by don't be confusing purpose with values and ESG and responsible business. Mistake number 2, purpose isn't measured. Now, purpose must be measured to be meaningful. Many investors today have maybe lulled people into a false sense of security because they're happy if your business has a purpose statement. But tomorrow, they'll want to see proof that you're delivering on it, which means you're not just talking about financial indicators, you're now going into a world of social, environmental, and economic measurement. That may require new partnerships, new skills on board to be able to do that effectively. Investors today want to know more than they used to, and they need this type of information. I'll come back to that a little bit later on. We'll see that in action. Governance systems are certainly moving, so don't wait. I would be on the front foot and be thinking about this today. Purpose must be measured in a credible way. So you've got your purpose statement. How do you prove that you are delivering on it? And mistake number 3, purpose isn't integrated into the business. It's sort of attached to the previous one, but what I mean by integration is it's fully embedded. It needs to be fully embedded to have any value. So a purpose statement without any follow through is just a pure fiction. And it is okay to say you are going through the process and be honest in that. You have a goal of embedding this, and it will take a little bit of time to get there, but don't pretend it's in place when it isn't, because you'll get found out and that will be damaging. Also be clear that embedding purpose in your business, if it's not already done effectively, isn't about reinventing your business. It's about enhancing what you currently do. So when you're doing your strategic planning, is purpose an overlay there? Does it help guide the strategy? Does it come in as a checkpoint? Is your end strategy consistent with the purpose of your organization? When you create new products, do you check in with your purpose? With your workforce, is everyone aligned to and delivering that purpose? Are KPIs and incentive structures in place to ensure everyone is working towards that common goal? So how many of these do you currently do? And just remember, it's about enhancing existing processes and practices and integrating purpose into everything you do. So to recap, why I'm highlighting these mistakes is purpose is core to your commercial value proposition. It's your business why, it's not your what or your how, and don't confuse it with values, ESG, or responsible business. Purpose needs to be measured and it needs to be integrated into everything you do. It's about strategy, operations, people, and if you can get that in place, that is a fantastic platform to really be excelling in your market. So now I want to move on to 3 questions. And I'm going to look first of all at question 1 being, do you have clarity of your model? Now, I did mention Jim Collins and his book, Good to Great, a while ago. What does it take for firms to go from just being good to truly great? And he put forward a model, which I'm going to show you, but I would say it needs a little bit of tweaking. So he said, you need to have clarity around what you're really deeply passionate about, what your business can be the best in the world at, and what drives your economic engine. So I'm going to replace the top one here with what I've added those words in yellow, what society needs that you are deeply passionate about. Just to make it really clear that it's what you're passionate about is maybe slightly different to what society needs that you're deeply passionate about. So for example, if you're passionate about making and selling cigarettes, you would argue that society doesn't really need that. So we want to create that alignment with societal need. So purpose really gives you a guidepost here, and it gives your people the guardrails that they need to help focus on delivering what society really needs with passion. Now, question 2. So question 1, to recap, really was, do you have clarity of that model? Now, question 2 is, and I'm going to make another tweak here, what is your, instead of what drives your economic engine, so if that might be thinking about, say, profit per customer, a financial metric, I'm going to change that up and say, what is the hybrid metric that drives your economic engine? So investors will be really focusing on these to determine winners and losers. And I'll explain what I mean by giving 2 examples, firstly outside of your sector before then coming back to a fintech one. So let's start with an energy company. Profit divided by CO2 emissions intensity is a hybrid metric. Its profit is a financial measure, CO2 intensity is an environmental or non-financial measure. So profit divided by CO2 intensity will give investment analysts a view of which companies are doing well, which ones are increasing profit while, say, maintaining CO2 intensity, or maybe reducing CO2 intensity will make them look more favorable. It will give analysts a really clear idea of who the winners and losers are likely to be. Now, another example is, and Bill George, who is the ex-CEO of Medtronic, the medical devices company, is famous in his company for really highlighting a key metric, and that was how many seconds elapse between restoring someone's life. And when he came on board, there was 100 seconds on average, so 1:40 on average between when an operation or procedure was using their products to help restore someone's life. By the time he left the company, that 100 seconds had shrunk down to 7 seconds, and now today sits at 2 per second. But this is a really powerful metric just to focus people on, I guess, the benefits of their products. You could also attach a financial measure to that, say profitability, into that equation as well. So let's now come into your sector. And if we, again, look at Borrowwell, and I haven't analyzed Borrowwell, so please don't take this as analysis or advice. Given it's focused on financial prosperity, then maybe a hybrid metric that was linking profitability to increases in customers' financial prosperity would be a wise metric to be monitoring and putting in place, because that will demonstrate whether that purpose is being delivered or not. So we've got to go beyond marketing here and really focus on whether you're making a genuine impact. And question 3, what stories are you telling and to whom to reinforce purpose? Communications is multi-focused and needs to be done according to stakeholder needs. So your people, just thinking internally for a moment, your people need to know what applying purpose looks like for reasons of personal motivation, teamwork, decision-making, and really doing the right thing, focusing on that guidepost within the guardrails that you set. Your investors will be after different types of stories, your customers, again, something else, and communities, something else again. So you need stories that speak to them to make purpose real. But those stories clearly must be authentic and honest. So I would hold back until you have them and you're really sure about them. So they're the three questions to ask. Do you have clarity of your model? Within that, what is your key hybrid metric that you need to be focusing on? And what stories are you telling and to whom to reinforce the delivery of your purpose? So recapping, we looked more closely here at purpose in business, what it is and isn't, and then 3 mistakes to avoid, 3 questions to ask. And you're in such a complex and evolving industry, I would argue purpose is your greatest asset. It's your greatest ally, but only if you want to build a valuable and sustainable business. So I trust this discussion has prompted some ideas. Maybe it's just reinforced your thinking in a certain number of areas. My name is Phil Preston, and I wish you all the best for FFCON23.